Welcome back Monday. Looking to cover the YieldMax funds positioning. Specifically, I'm looking to cover the most widely held ones, or the ones with the largest market cap. So my order today will be MSTY, then NVDY, then TSLY PLTY, and then I'm not necessarily prepared for SMCY at the moment, so I'll skip that and hit AMZY, and then I'll also just hit HOOY quick, which I think is next. As your widest or your largest held YieldMax ETFs from the single underlying equity perspective. So to start off with MSTY, wait for it to load here quick. And as always with these, to make sure they're updated, just see what the last date is. You can see we got the 18th, which is today. As far as the fund positioning, to start off with, MSTY's been flat, I guess, for a little while now. I know people tend to dislike it at the moment, but I think it has a brighter future ahead with the future of Bitcoin established. But for those who own it, from a positioning perspective, MSTY is currently down slightly, $365 a share. So 365, a little higher than this current line. It's about right here. You can see their contracts sold. They have them sold at 372.50, 375, then all the way up to 385 is where they had the most sold. Then they have the upper end of the credit spread contracts starting at 405. As far as how the fund's made up, we do got the synthetic at a negative $1.26 per share. So therefore our cash position is higher than our ETF market cap at the moment, with other contracts right now sold equaling about 21 cents a share at the moment. From a synthetic usage risk perspective, they do have about 46% of a call spread. That said, they also have 29,640 contracts that are yet unsold. So we'll see if they sell those today. But as of the last update, or when I pulled their positioning data, they had 29,640 potential contracts that they can sell. What that means is they have the collateral to sell those. So we'll see if they do that. And then as far as just looking at them quick, how the fund's been doing from a component perspective. So you can see their cash. Oh, I guess what you see here is they sold contracts, right? So they sold contracts 21 cents. Thereby that pumped their cash position up by about 21 cents. The ETF value here in this teal line tends to clearly track the synthetic, but the cash position, you can see they paid their distribution, and then with selling the contracts for this week, it popped it up a little bit from $19.16 to $19.36. That's MSTY. Jumping over to NVDY for those who are interested. NVDY, the second most held YieldMax fund. The underlying equity right now is sitting at 181, almost 182. They do have a lot of contracts sold at the 182.50, so watch that one. And then they got them the most sold at 185 and then 187.50, with the upper end of the credit spreads they have sold, which means they bought calls starting at 190 all the way up to the 197.50 strike prices. As far as how they're using their synthetic, they got 107,040 contracts as collateral available. They've sold contracts against all those. They got a remaining capacity of 0. Of the 107,040 they sold, they got insurance of 94,850, or 89% kind of insurance rate. And then from a fund makeup perspective, the synthetics still got a $1.29 of value. The other contracts they've sold right now values at about 12 cents. That, assuming those expire worthless, it'll add 12 cents to the ETF value. From a market cap, I just wanted to touch base on this. So they got that one that's really close to the share price. On a per share basis, that 182.50 is currently adding, or it's got about a 7-cent drag on the fund. So if that expires worthless, the fund would go up by 7 cents. That's a quick touch base on its components. Nothing really to see here. You can see NVDY did just pay its distribution, therefore the cash position fell. But then it went from 1564 up to 1576, based primarily on, of course, selling those weekly contracts. Then the ETF price has been following the synthetic minus the cash distribution, which that component individually took it down by the distribution rate. Okay, then touch base on CONY. So there's a couple of groups C. We're going to go to CONY quick. Wait for this one to load here. CONY, I guess overall, Market cap did fall with the fall of Coinbase, but it's been coming back, largely driven on more shares outstanding. Overall, Coinbase is back at 323, up a bit today, back up to almost 750 a share. From a positioning perspective, Coinbase, the stock, is at 323, so this should be probably up here more. It did pass the 320 strike, so the strike or the synthetic value should be positive now. Per my last update, probably market open, the stock price was below 310. So with the uptick, the synthetic should go from like a negative value to a positive value. Just wanted to point that out. But positioning wise, they got all the contracts sold between the 330 and the 340 strikes, with most of them at the 335. And then from the credit spread, what they bought, they started buying contracts at the 358 and stopped at 365. So that's what we're looking at for the week ending 3/22/2025. As far as how they're positioning, not sure why that went gray there, but let me try refreshing quick. So if we go to their synthetic usage, they had 43,000 contracts. They sold contracts from against all of them. They got about 70% insurance through the credit spreads. And then recently, if we look at how the fund has been doing, you can tailor this how you just want to see the last few days, see how it's been doing, take out some of the noise. You can select that accordingly. And we can see the synthetic was negative up to positive, and it's just about even right now. And then the cash position, really everything, not really much to see here in the last 7-8 days, or what is that, 6, maybe 10 days. ETF price has gone up a little bit with the synthetic value. Cash position, 747, been relatively stable, so not much to see with CONY. And then jumping to TSLY quick. So with all these TSLY, go to the TSLY depth details page to see. So from positioning on TSLY, first of all, just make sure the data is updated through 8/18. Positioning, we got Tesla at 334, so just under 335. But our contracts we sold start at 337.50 and go up to 347.50. So that's where everything is sold, with most of it at the 342.50. But then we got stuff being bought again at 357.50 up to 372.50. So that's the positioning we're looking at right now. The synthetics are both the 290 and 295. So when you look at the fund makeup per share, the synthetics got a pretty good value, almost $1 in value, pushing the ETF price above their current cash holdings. And the other contracts are at a negative 7-cent drag currently on the fund. Let's just take a look at their synthetic. So basically we got everything that we can sold, or we got contracts against all of our collateral sold. So 0 remaining capacity, or 0 synthetic contracts sitting there that are basically, the whole synthetic is capped right now. I think that's what I want to say. But we do got insurance on 75% of what we sold. So if you basically add all these contracts together and then you subtract these, you have basically 25%, because 75% would be insured. And then just looking at anything to note, synthetic value has been going up lately. They just sold some contracts, which pushed their cash position up slightly, but overall the ETF price is kind of tracking the synthetic. Although it looks like right through here, at one point it's not tracking the synthetic entirely, because I believe they used some cash to reformulate where their synthetic was structured. So that is TSLY. Then Palantir, that's a Group B item. So let's jump into Palantir quickly. Got about Palantir, AMZY, and HOOY, just to touch base on those ones quick. Palantir got a price of 172.50. Got all the contracts sold right at 180, 182.50, and 185. But then shortly after we are started buying them again at 187.50 and 192.50. So a pretty tight spread between where we're selling and where we're buying them. As far as the synthetic value with the underlying equity going up, got $14.30 of value, pretty large. And then as far as the synthetic usage, 36,607 contracts available to sell against. We got 3,642 yet to be sold. So we got a kind of an uncapped 3,642 contracts in the synthetic. And then we do got a 90% insurance, which that might be insurance and everything if you take out the remaining capacity that's yet to be unsold or sold. And then I guess just looking recently, ETF value kind of up and down. They did pay that massive distribution, which you can see there, which was the key reason taking the share price down. But other than that, I guess not too much. Synthetic value has fallen short somewhat from about 20 a share down to 14, but overall has been doing pretty good. Let's see, AMZY, for those who, I guess, feel free to drop if you're not interested in AMZY, just covering some of the largest ETF market cap, YieldMax underlying equity funds. But AMZY, from a positioning perspective, got Amazon about 230 a share. They do got a lot of contracts sold at 230, so it'll be interesting to see how that one goes, where those contracts will expire worthless or they'll have to roll them. But the next strike is 235, where they have some sold. And I guess interesting, they got a lot bought at 237.50, but then they got some more sold at 240. So they got this buy in between sells, which is different than what they're doing in other strategies. And then from fund makeup, they got 84 cents in their synthetic, negative 13 cents right now, drag from the other weekly contracts they sold. They have sold everything with a 74% kind of insurance rate. And then anything to note as far as component makeup, just Amazon stock's been going up, driving the synthetic up recently. And I think that's about all, which has pushed the ETF market price back up a little bit from, looked like it got down in the 14s, but now it's back up in the 15 range as the underlying equity has done slightly better. And then I guess finally, HOOY, which I view as an up-and-comer that were Robinhoods. I've been paying pretty big distributions based on the volatility of the underlying equity. It's also been going up because the underlying equity of Robinhood has been doing quite well, up to 113.78, making HOOY back up to 71.50. This is another Group C, which I believe reports or will be paying this week. But as far as where they got stuff sold, so 113.78 is where the stock's at. They do got some sold at 113, 114, all the way up to 119. And then at 121, they started buying again. From a fund makeup, the synthetic has $6.29 in it. Other contracts sold $1.44. So once again, I think this will pay a pretty good distribution from a nominal perspective. And then synthetic, they've written calls against everything they can, and they got 86% credit spreads employed. So they got upside bought on 86%. And then I guess real quick, how it's been performing lately. Synthetic's been pretty steady. There is a lot of kind of decent amount of volatility, but it's since, I guess, the last month, I guess it's gone from 10 to 6, but it's been up and down, up to 13, down to about 0. So fluctuating up and down. Or I should say it was high. I guess I misspoke. This downturn here wasn't actually from the stock going down. It looks like you can see from a cash positioning perspective, they sold off their synthetic and really increased their cash value and then reestablished it. And then even since then, the synthetic's been going up in value. So that's good to see. So cash positioning keeps going up. ETF price actually keeps going up even after paying pretty good distributions. What are the distributions? As always, if you want to see the distributions, just go to the main HOOY tab. This will come up and it'll give you a distribution per share tab. And you can see the distribution has been pretty stellar as of late. I expect another probably pretty good one coming up too. But anyway, that's positioning for the top 7 YieldMax ETF funds minus SMCY, which I will add shortly. But thanks.